Hi, I'm Michael Baez. I'm a CPA who helps contractors by giving them the tools to understand their numbers and build a more profitable business. So today I'll be talking about the top 5 KPIs for those in the construction industry. So the first one we're going to talk about is the gross profit margin. So what this is the revenue minus your direct job costs that you spend on each job. So what's left over is going to be the money you could spend on operating expenses and other general business expenses. This can be industry specific. So depending if you're residential, commercial, things like that, there is a benchmark. It could be 30%, 25%. And you compare that to what you're doing to see if you're making enough money on each job. Number 2 is going to be the current ratio, and this is going to measure the liquidity of the company. This is where you take your assets of the company and you divide that by the liabilities of the company. So basically, what you're saying is how much money you have or assets you have over how much you owe. And so when you're looking at this, a healthy range would be 1.3 or above. Too low, and you might have cash issues with paying your expenses. If it's too high, you may be keeping too much cash and you could be investing that to grow your business. This is something I recommend checking monthly. Number 3 is going to be your revenue per employee. So you want to see as you're growing and as you're adding more employees that your revenue stays pretty steady. If you continue to add employees and it trends down, it means that you're getting less efficient at the process and you're adding more bloat to the business. So there is going to be a little bit of that, but you want to make sure that it's not too bad. Number 4 is going to be your debt to equity ratio. And this is what is referred to as your leverage. So this is the total debt over the owner's equity. And so this is going to be a ratio that you want to be about 3.0 or lower. This shows that you are making more money and you have more equity in the business than debt. And the last one is operating income. So this is just your gross profit, which is going to be your revenue minus your job costs, your gross profit, and then you minus that from operating expenses. So what that means is the money you made, you minus out the job costs, then you minus out what it takes to run the business. That gives you how much money you're really making from running your normal business. And then anything other than that is going to be interest expense, depreciation expense, maybe some taxes, things that aren't really necessarily involved in the operation of the business, but they are expenses of the business. So this gives you a true benchmark to look at. And those are the top 5 KPIs you should be tracking. But from bids to bottom lines, we're with you every step of the way. See you next time for more contractor tips.